Hello everyone, Jesse Webb, Traders Pro. Market conditions, looking here at the buy-sell ratio to begin with, quite extended at this level, and we are certainly due or getting close to a location where we could get a little bit of a pullback here and watch for some support area. More than likely, we're going to be continuing to be chopping around this range right here. I'll show you on the chart here in just a minute, but as I've mentioned on past updates, we typically see this retrace back and then work out this three-part counter trend. It doesn't always do that, but typically you can see, you're getting at least two different moves out of one of these crossovers. So this has been a pretty significant sell-off, and we'll watch to see how that unfolds. We're still bearish in this bull market, and we've broken down through quite a bit of support levels, but we are certainly seeing momentum now on the extreme range to the downside, and we'll watch some support levels here on S&P 500. Breadth is not accelerating as quickly as the momentum, but we are seeing it continue to slide, approaching that lower level with sentiment still in that upper range. So we could be getting set up here for a little bit of a bounce. Let me show you the sentiment chart here also. We're now down in that range, sitting at 11. And this last move lower was around 13, 14. This last move here was around 18. So we're below the level, at least in the last year. If we go out to the last 3 years, you can see we've been lower than that, where this move here in January of last year, January of 22, we saw that move all the way down to zero, essentially. Zero is going to be capped out on the bottom end, and we had that here. So those were pretty extreme lows, but anytime we're approaching this level right here, we're getting set up for a shorter term bounce. If we look at the chart on SPY, I've got some of our trending zones and demand zones set up here, where we have this first one, which is typically this upper range. That's our momentum zone, where we want to see a stock or a market maintain that support area and continue that overall uptrend. It hasn't done that. This is SPY, S&P 500, and we're continuing to see sliding. So more than likely, we will attempt this 429 range on SPY, but we are extended. I've had a pretty decent sell-off here. That can always go more. Let's take a look to see what that number that's at. One negative 193. I've seen that go to one negative 250 on. That's typically in a bear market though, and we're not seeing that kind of momentum, at least not yet. So we are at that range. So I'd be watching to see. We could counter trim back up, but now this is going to be kind of the zone of interest right inside this range to see if we counter trend up, run into resistance, and then come back down and find some support. We're definitely going to see some volatility over the next few weeks, just based on the selling, and now we've got people waking up to the stock market again, and especially when we get some selling happening like this. If we take a look at also kind of a breadth indicator that I like to look at, and that is here on this sectors tab. We look at sectors, the sector list ETFs, and we've got one that's back up in the uptrend, which is the energy iShares, two in hold, but all of them are in sell. So this is also an indication of what inside of this downtrend might be working. Healthcare, telecom, energy is really the only one that is holding strong. Everything else is in significant downtrend. So that can act as another market indicator. We've talked about ETFs and utilizing the muscle ETFs to see what the current trends are, what's happening, and we definitely have seen these interest rates, which are interest rate ETFs, which are moving pretty strong. So this is the 20-year Treasury bear. It's a 3x negative bear. So as interest rates or as bond yields, a 20-year Treasury is dropping. This is going up by 3 times that. Okay, so it's as bonds move lower or interest rates move higher, this is going to also move higher. So you can see what's been happening with bonds. Bonds have been selling off, rates have been moving higher, and that is also getting a little bit towards the upper end of that range, but it's definitely a leader. It's been one of the leading trends. That's why it's made it into this list, this muscle ETF list. And also interest rates. This PFIX is an interesting ETF. It looks the same, but it's actually measuring the the interest rates here as well, or tracking the interest rates, I should say. So we're seeing some of those. So, there's so many ETFs that are out there. It's going to pull them in. It's going to rank them. You can go through and see what's working in the market currently. This is also, sometimes there's lots of choices because you have multiple companies that are showing the same thing. Some interesting ETFs there with Tesla, individual ETFs. We're seeing biotech also sliding, but we're also seeing oil rallying. So we're seeing oil, as we saw in that ETF, this range here, where we're seeing these energies, we're going to see that same lineup here, but it might be a little bit more focused. It might be, in this case, you're getting oil and gas, or you're able to utilize an ETF if you prefer that to have a little more diversification. You can focus on that. And then also the new buy ETFs. They're actually an interesting one here, URNM, which is getting a nice trend higher, nice confirmation bar inside of that momentum zone, still finding support right there, and a really big move. That symbol on that is URNM. We're seeing basic material stocks also moving higher, uranium, mining. These are some interesting stocks to look at. On the muscle ETFs, new buys, let's go through some of these. CAAP also looking nice here, and big volume on this chart as well. If you just click on this button and open up that volume, so you have a stock that is inside of this momentum zone, bouncing off of it, staying in this upper quarter, and on humongous volume and a pretty decent bar. It's had a little bit of a selling here, but that was an ugly market day, so you may see some confirmation moves higher on that stock. Keep an eye on that one today. FTAI, also a nice engulfing pattern here in the upper zone. You've got this upper range engulfing pattern where it's covering the bar of the prior day, and could see some acceleration on that stock. Let's take a look at the next couple here. NR, I really liked this one also because it's in that oil energy sector. Also had a really nice volume day, bouncing off of the support area inside that upper momentum range, and that's where we want it. We want to see that stock holding inside of that range for as long as possible. This kind of becomes our trending momentum comfort zone, and as long as that stock is staying up inside of that range, and in this case it's now bounced, finding support and moving higher in a leading sector. Okay, remember that's also important, is what sectors are leading. Well, we can go in, we know that right now the energy sector is leading, and we can take a look at that stock and say, is that in the sector that is leading? It's in the energy, and we know that oil is having a bounce. That's a part of that overall sector. Let's look at a couple of others here. COCO, I've done an update on that this week, which is really a nice looking stock fundamentally as well, and breaking back up into that upper range, a new buy location. Really nice fundamental profile on this stock as well. We'll see if it can get it back up here and hold that. It's had a pretty big move here over the last year, but is also a fantastic company to consider. That'll do it for today's update. Everyone have a fantastic day today.